Capital markets. Going back to what we talked about earlier about CBDs versus suburbs, and I would say suburbs and secondary markets, typically at this stage in the cycle, you see a convergence in cap rates where the cap rates in the major markets is very similar to the cap rates in secondary and suburban markets. Haven't seen that at all this time. We still see a major gap, value gap between the two, not only in terms of cap rates, which could be a 200-300 basis points difference, but also in the price per square foot, where many of these assets in secondary and suburban markets are still trading well below replacement cost. Do you think that gap's going to narrow?
It really connects into the first question you asked about the suburbs and the resurgence we've seen in the suburbs. There's been such a focus on the CBD assets, the trophy assets, that there's been less and less demand in the suburbs. I think as the suburbs, Spencer, picks up, the fundamentals pick up on the leasing side, you're going to see that gap narrow. We've never seen such a wide gap. I don't think it closes overnight, but I think it's going to narrow.
Right, and I think that from the capital markets perspective, if your capital that requires a certain yield, very difficult to achieve those yields, at least initially, in certain gateway markets where cap rates have gotten so low.